Regulatory technology, or RegTech, represents a crucial shift in regulatory compliance, blending advanced technology with compliance processes to improve transparency, reduce risks, and streamline operations. In a world where regulatory demands are constantly expanding, especially in fields like finance, healthcare, and telecommunications, RegTech provides essential tools that enable businesses to maintain compliance while optimizing costs. Key areas of RegTech include compliance monitoring, KYC and AML, reporting enhancements, regulatory sandbox environments, and practical implementations that showcase RegTech's transformative potential. Compliance monitoring using big data. Compliance monitoring is becoming more challenging as regulations grow in complexity. To manage this, businesses increasingly turn to big data to enhance compliance checks, monitor operations continuously, and stay ahead of potential risks. Data collection and integration. Compliance monitoring with big data begins with aggregating information from various sources, including transaction logs, audit trails, customer interactions, and regulatory databases. By combining these data streams, companies can obtain a comprehensive view of their compliance environment and detect risks across departments. Real-time analytics and anomaly detection. With advanced analytics and machine learning, companies can process vast amounts of data in real time to spot suspicious patterns or anomalies that may indicate fraud or regulatory breaches. For instance, a bank using big data for compliance can detect unusual transaction patterns that might signify money laundering, enabling them to address issues promptly. Continuous monitoring and predictive analytics. Big data allows for continuous compliance monitoring instead of relying on periodic reviews, ensuring that deviations from regulatory standards are immediately flagged. Predictive analytics, which uses historical data to anticipate compliance issues, further enhances this process by enabling proactive risk management. For example, if a pattern of suspicious activity emerges, predictive models can trigger alerts, helping businesses address risks before they escalate. Big data-driven compliance monitoring improves regulatory adherence and operational efficiency, reducing costs associated with regulatory penalties. However, implementing these systems requires a robust framework to address data security and privacy concerns, particularly in sensitive areas like finance and healthcare. KYC and anti-money laundering, AML. Know your customer, KYC, and anti-money laundering, AML regulations are essential for maintaining financial integrity and preventing illicit activities such as money laundering and terrorist financing. RegTech solutions have transformed these processes by introducing advanced technology to enhance detection, efficiency, and security. Understanding KYC. KYC involves verifying customer identities, assessing potential risks, and monitoring customer activity. The process consists of customer identification, ongoing monitoring, and risk management, enabling institutions to understand customer behavior and identify potential security risks early. AML monitoring and compliance. AML regulations require financial institutions to monitor customer transactions continuously to detect patterns indicative of money laundering. By analyzing transaction data, financial institutions can detect anomalies, such as unusual fund transfers or sudden changes in transaction volume, that may signify criminal activity. Reports of suspicious activity are then submitted to regulatory bodies. Technology's role in KYC and AML. With advancements in AI and machine learning, KYC and AML processes have become faster and more precise. Machine learning algorithms analyze customer data in real time, identifying high-risk profiles and alerting compliance teams to suspicious patterns. Automating these processes reduces manual workload, enhances accuracy, and improves detection capabilities, allowing financial institutions to focus on the more complex aspects of regulatory compliance. While RegTech has streamlined KYC and AML processes, challenges remain in balancing compliance with customer convenience. Financial institutions must implement efficient processes that meet regulatory standards without causing unnecessary delays for customers. Reporting and transparency enhancements. Transparency in operations and enhanced reporting are vital for building trust with stakeholders, ensuring regulatory compliance, and supporting strategic decision-making. Modern technology has made it possible for companies to provide more detailed, timely, and accessible disclosures, meeting the needs of regulatory bodies and the public alike. Importance of transparency. Transparency allows stakeholders, including investors, customers, and regulators, to gain insight into a company's operations, financial health, and ethical standards. Enhanced reporting goes beyond financial data to include insights into corporate governance, environmental impact, and social responsibility, demonstrating a company's commitment to ethical practices and aligning with stakeholder expectations. Technology and reporting improvements. Data management tools enable companies to track and report on various metrics more accurately. For example, blockchain technology enhances transparency by creating an immutable, verifiable ledger of transactions. In supply chain management, blockchain enables companies to track goods from origin to end user, ensuring transparency and reducing fraud. Regulatory compliance. Improved reporting is crucial for meeting increasingly rigorous regulatory requirements, which now include non-financial data such as environmental performance and social impact. Compliance with standards from bodies like the International Accounting Standards Board, IASB, ensures transparency and comparability, fostering trust among stakeholders. While transparency and enhanced reporting bring clear benefits, companies must carefully balance the information shared to avoid overwhelming stakeholders. Privacy and security also remain critical, particularly when handling sensitive or proprietary information. Regulatory sandbox environments. Regulatory sandbox environments offer a unique approach to fostering innovation while ensuring regulatory oversight, particularly in rapidly evolving sectors like finance, healthcare, and technology. These controlled environments allow businesses to test new products, services, or business models in real-world conditions while remaining under regulatory supervision. Purpose and structure. Sandboxes allow regulators to understand emerging technologies better before they are widely adopted. They also provide businesses with a safe testing space to refine innovations without fully adhering to complex regulatory requirements. For a set period, companies can pilot test their products under regulatory guidance, enabling them to validate concepts and gather real-world feedback while protecting consumers and adhering to regulatory standards. Benefits for innovators and regulators. In a sandbox, companies can reduce the costs and time associated with regulatory approvals, allowing innovations to reach the market more quickly. Regulators, in turn, gain insights into new technologies and their potential impacts, which aids in developing appropriate policies that encourage innovation without compromising consumer safety. Examples and expansion. Regulatory sandboxes are particularly prevalent in financial technology, where companies test solutions related to digital payments, blockchain, and lending. Healthcare and energy sectors also use sandbox models to trial technologies like digital health tools and renewable energy solutions. These environments help regulators adapt rules based on empirical evidence, ensuring that regulations remain relevant in fast-changing industries. While regulatory sandboxes foster innovation, they also present challenges. Limited spots in sandbox programs may provide certain companies with a competitive advantage, and what works in a sandbox may not scale easily. To address these concerns, transparency, clear criteria, and rigorous monitoring are essential. Case study: implementing RegTech solutions. Regulatory technology can transform compliance processes, as demonstrated by Midbank, a mid-sized financial institution facing challenges with outdated systems. Midbank's experience highlights how RegTech solutions can streamline compliance and reduce operational costs. Challenges and initial needs. Midbank's manual compliance processes were slow, error-prone, and expensive. Compliance requirements continue to evolve, creating operational bottlenecks and increasing the risk of non-compliance. To address these issues, Midbank sought a solution that would improve efficiency, accuracy, and scalability. Adopting a RegTech solution, Midbank implemented a comprehensive RegTech platform incorporating AI, machine learning, and blockchain. AI and machine learning streamlined the KYC process by automating customer data analysis and flagging potential risks. Blockchain provided a secure, tamper-proof record of compliance data, improving accuracy and facilitating audits. Real-time monitoring. The RegTech solution enabled Midbank to conduct real-time monitoring of transactions, which helped detect suspicious activities immediately. By automating compliance checks, Midbank reduced the time required for regulatory tasks, allowing compliance teams to focus on high-priority cases. Outcomes and benefits. The RegTech solution improved processing speed and accuracy, reducing compliance costs and minimizing human error. The scalability of the platform allowed Midbank to expand its operations without needing proportional compliance resources. Additionally, the streamlined processes enabled Midbank to remain compliant with evolving regulations, strengthening its market position and reducing the risk of penalties. Midbank's implementation of RegTech showcases the potential for technology to enhance compliance processes and drive growth. Other companies can take note of this approach, recognizing that RegTech is not merely a compliance tool, but a strategic asset that enhances efficiency, and supports scalability. Regulatory technology, or RegTech, plays a pivotal role in helping organizations navigate complex regulatory environments. By harnessing advanced technology like big data, AI, and blockchains, RegTech enables companies to maintain compliance, monitor operations, and streamline KYC and AML processes efficiently. With the support of regulatory sandbox environments, businesses can responsibly innovate, testing new solutions under regulatory oversight while protecting consumers. The Midbank case study highlights RegTech's transformative potential, demonstrating how technology-driven compliance solutions improve operational efficiency, reduce costs, and enhance scalability. In today's increasingly regulated landscape, embracing RegTech is essential for organizations looking to stay competitive and compliant. As regulatory demands evolve, RegTech will remain central to helping businesses navigate this complexity, ensuring compliance, transparency, and security across industries.